So, can you get into a beachfront home with only a $2,000 deposit? Well, absolutely. If you've got good income, you've got clean credit, and you want to escape the rent trap or perhaps buy an investment property, we can show you in detail how this is done. At FIFO Business Lounge, over the years, we've assisted clients get back into property after life events such as divorce. We've helped first home buyers, and we've helped investors buy property inside and outside their super funds. So let's get out of the goldfields now and get straight down to the beach, and I'll show you how it's done. So we're here at beautiful Dawesville. We're out of the flyers, we're out of the goldfields, we're away from the mines. We're here at the beach actually. We're standing on one of the lots that are available through this micro deposit product. So I'm going to run through a real scenario with you. From this block, 250 metre walk to the beach, and show you how you can get into a home of your own with only a minimal deposit using a shared equity. So, what is shared equity? I hear you ask. Let's find out.
Hi, Chris, and welcome to the Home Affordability Solutions. My name is Rob. I'm looking forward to working with you, Chris, and in regard to your Dawesville House and Land Package program. I represent a lender called the Home Affordability Solutions. We're a shared equity lender, and I'd like to just go over our product with you so you have a better understanding of how you can get back into the market if you've been out of the market for a while or have had any adverse events in your life that kept you out of the market for a bit. You were in, you're out. I know that many of you are out there who would like to buy again, and we're going to share this solution with you. So again, I'm Rob from the Home Affordability Solutions, and what we do is help home buyers, next home buyers, investors get into a house where the deposit is the only challenge. Okay, so how HAS works is we are a deposit lender for all intents and purposes. You have to come up with just a small amount of 2.5% of the purchase price. We then lend you 17.5% of the purchase price, and your finance broker will arrange for the balance of 80%. So what that does is two things. One is it gets you two loans that avoid lender's mortgage insurance. So you have a big savings there. And the second thing it does is the 2.5% deposit does not have to actually come from you. It's something that we call a non-genuine savings deposit. So Chris has identified an opportunity where the 2.5% deposit will be built into the house and land package that he's offering his select group of FIFO workers, and that 2.5% is will represent your deposit. So that's why he alluded to a no deposit home loan. Is because the 2.5% non-genuine savings deposit that we require is already built into the property, and I hope that makes sense. Now, the structure that I talked about is your finance broker will arrange for 80%, an 80% loan of the purchase price. You come up with the 2.5%, which is already built in, so you don't have to come up with anything but your initial deposit of, I believe it's $3,000, and HAS will come up with the 17.5%. So effectively, you're borrowing nearly 100% of the property, with the exception of the small deposit to secure the land. Okay, so let's have a look at the big picture. You have a first mortgage of 80% of the purchase price. Because it's 80% and under, you avoid LMI. 20% of the deposit, 2.5% is already coming from the developer, and 17.5% is coming from HAS. So that's the structure of the loan. Now, HAS will lend you the money, its 17.5% portion, at at 3.95%, which is amazing. Now, the reason they're lending that is because it is shared equity. So how shared equity works is if you borrow 17.5% from us, hypothetically, if that is your net loan with us, if your property, say, is $900,000 and goes to $1 million in 3 years when you go to repay us, you will share 17.5% of 100,000, which is 17,500. Much cheaper than LMI, and much better product, I believe, than the shared ownership products that are out there. Remember, this is shared equity, so we're only sharing the amount above what you purchased the house for, so 17.5% above whatever the house grows in value, where other schemes are sharing the house. In other words, you're on title with another entity who owns 30% of your house. So that is not us. That's shared ownership. We are shared equity. So I hope that makes sense. The next thing I'd like to show you is how we work out the payment and the structure of your loan. So I'll do that right now for you. Okay. So what I've brought up for you to have a look at, let's make this a little bigger for you. Okay. So this is how the structure comes together. We have a house and land package offering of $898,000 in total. Chris has made arrangements with the developer to put in $22,450, which is 2.5% deposit required from Haas to get our loan. So if we look at this, the construction of this property is $499. The purchase price is $399 for the land. And if we add those two amounts up, we should get $898. All right. So the structure of the loan is the deposit of 2.5%, 80% from the first lender, which will represent $718,400, and 17.5%, a base facility of $157 from Haas. That's 100% of the loan required to buy this property. The payments that are calculated, I mentioned earlier, it is guaranteed for 5 years. It's only 3.95% interest only, which is $626 a month. Now, what's very clever about this product is the $626 per month. We will just capitalize or add that to your loan. So you're not actually making a payment to us. You're only making the payment to the first lender of 80%. So we will just add that to your total Haas facility and just lend you the whole amount plus the payment. What we will then do is the average person is only with us. Think of this as a bridge. Is only with us for 3.5 years. Now, this particular product has been around for 13 years. So it's not some new product that we're making up and we're, just trying to, flog a property and show you how this deposit product works. This product's tried and tested for many, many years. So we know the average person is only with us for 3.5 years. So for example, this is the shared equity part I'm going to talk about again. If you purchase for $898,000 and your property in 3.5 years is say worth $1 million, just so we have a nice number to work with, that's about $100,000 increase. We will share 17.5% of that increased equity only. Notice I didn't say we own 17.5% of your house. You own 100% of the house. We will only share the equity. So again, if it goes to $1 million, which I'm positive it will, you will owe us $17,500 because that's the amount that you borrowed from us, and that is our shared equity. So Chris wanted me to explain that to you, and it's a terrific opportunity that he has managed to put together with the developer. Chris obviously has a finance background, So he was able to come to me and come up with a very good solution for anybody who wants to take advantage of. Back to you, Chris. Thanks a lot.
So that's our quick explain on shared equity. If you want to learn more, book in a quick chat with our team and we'll speak to you soon. Holy